It is 11 minutes past 9 on Wednesday, the 17th of June. It is hump day on what is already a very interesting week. And actually, we've actually had the opportunity to record this one day earlier. So we're actually planning on recording this market broadcast on Thursday, but we've got the opportunity to do it today. So I thought I would take the opportunity to do it on the Wednesday, because today is actually a very interesting day, because it's a day when official trade talks begin between the UK and with Australia. And on that note, I brought on Sam Volkering, our native Australian editor. Sam, how are you doing today?
Good morning. I'm doing very well. I feel quite privileged to be the token Australian in the office these days.
Right. What do you make of that UK Australia sort of link? Do you think we're going to have a lot more stuff that's made in Australia and a lot more stuff that's made in the UK appearing in Australia in the years to come?
I mean, free trade agreements are a good thing. There's no doubt about it. And a free trade agreement between the UK and between Australia. And we should also add, New Zealand is included in these talks. They're quite often forgotten, although quite recently New Zealand is everyone's favourite country that they don't live in because they don't have any instances of coronavirus, except for two British people. Yeah, they were two British people anyway. So trade talks are kicking off today. It's good, right? I mean, it's good for industry. It's good that the UK isn't going to be so reliant on Europe because it doesn't need to be. And there's going to be some of the goods that you'll start to see. There'll be an increase in Australian wine, which is always good news. If they can reduce tariffs on those and potentially beef. So beef's an interesting one as well because a lot of beef supply comes from Brazil. Brazil are going through their own issues at the moment with the health crisis and the political climate over there, and so there could be some constraints on the beef industry coming out of Brazil, and so that could open up some opportunities for the Australians to bring some over here. Kiwi fruit from New Zealand, Manuka honey. A lot of people don't realize how big the Manuka honey industry is because of its wonderful health properties. And so, these are sorts of things that are going to be part of this trade talks, and I think that's a good thing. And I think it also reinforces, as I said, the point that in this post-Brexit world, the idea of the UK once again being a very self-sovereign country has somewhat fallen to the wayside. But it's going to be a good thing. It's going to be a good thing long term. We're already starting to see some of the benefits of that flow out. So we know that Unilever, the big consumer brands company, Unilever is looking to have their headquarters now here in the UK, I think in London. There was an intention to have that in the Netherlands, and they did a big U-turn on that, and that's going to be in London. And we also know that Nissan have decided to shut their Barcelona plant instead of the Sunderland plant. And while they have clipped off some jobs just recently, I think this week, at Sunderland, a few hundred, I think, it's better that they maintain a base here in the UK rather than shutting Sunderland and keeping Barcelona going. So, that's a massive win as well in the post-Brexit world. And then there's talk that Tesla is really looking to build a factory here in the UK as well, which would be huge. And with that, there's another couple of British startups that are rumored to be saying they're going to invest up to $4 billion in a gigafactory car battery plant as well. So, trade talks between Australia and New Zealand, big multinationals looking at plonking down operations in the UK. All of this it's actually probably one of the most exciting times I think the UK's ever had in terms of the potential over the next decade for economic growth and new industry and innovation and development and expansion of existing industry as it goes about things solo. And that also, funnily enough, I think creates really big opportunities for investors in the UK markets. And it's why I've been so excited over the last couple of years now about the position that the UK has been getting to with the market and with some of the stock market opportunities that I think will come out of this.
Right. All this sort of opportunity that lies in the post-Brexit world to get these trade deals with other nations. It reminds me of of something that was apparently quite popular. I only discovered this maybe probably late last year. There was a proposal that became quite popular among certain political groups. It was about it was called the Can-Zuck plan, and the Can-Zuck idea was to get Canada, New Zealand, Australia, and the UK all together as one sort of free trading bloc. It was quite an interesting proposal, as it was almost a sort of a trading reunification of all of these old sort of imperial outposts. And then sort of and creating a kind of union, a commonwealth between them, where you'd get sort of standardization of regulation, things like that. And that was something that was, I think it was 2014, if I try and think of it off the top of my head, this kind of thing was being bandied around. And of course, an incredibly radical shift from the EU, of course. But it did seem like I wonder if that idea would become more popular in the future. Considering there's already so much cooperation between all of those countries because they're all part of the Five Eyes intelligence network. We already share all of this defense stuff. I saw recently that Boeing's Australia division, where they do a lot of their new innovation on things like drones. So they've got their Loyal Wingman program there. I think they've started so Boeing Australia has started a collaboration with the UK affiliate, as it were, for sharing some of this industrial knowledge and the like. And it seems like something like that, maybe it would become popular again. To be another political movement would be that Can-Zuck idea. What do you make of that?
Yeah, I think I don't see why not. I think like you said, the cooperation between the Commonwealth countries or the colonies, depending on which way you want to look at it, has been strong for a long time. And as you rightly said, they're all part of the Five Eyes network. So that's the UK, New Zealand, Australia, Canada, and the US, which is a very wide-reaching, globally pervasive spying network. I guess is the simplest way to describe it. Yeah. And it's the cooperation from the Signals Directorate and the NSA and GCHQ and et cetera, et cetera. So they share a lot of information as it is on a government level, and I think then once you get government looking at talking to each other on a trade level as well, that I don't see it as a I don't think there's going to be any roadblocks, basically. I think these trade talks are going to be friendly. They're going to be well received. They're going to be beneficial for all countries involved. And some of it is also, I think, a bit of, I'm not sure what the right word is, but it sort of panders a little bit to the US in the sense that Canada, Australia, and New Zealand are very chummy with the US, regardless of what appearances with Canada and US might be. They're quite reliant on Canada's quite reliant on the US. Australia is very reliant on the US for trade. And so I think that while we talk about these trade agreements between Australia and New Zealand and the UK and the benefits for the countries involved, that sort of lingering and lurking in the background is the US as well. And these almost, I think, precede further deals with the US. Again, all of this is good news for the UK economy. I think that's probably the important thing to take away from it all is from my perspective, none of this is like, oh, that's going to be bad for the British economy. I think all of it is positive signs. So, whatever it might be, whether it's, trade on goods and services or agriculture or higher knowledge industries and services, even things like freer movement for education and stuff like that. I think it's all going to be good news for all countries involved, because none of these countries are real massive giants of manufacturing. They used to be. The UK in particular used to be, a manufacturing behemoth, but none of them are really going to be in that lane anymore. That sort of shifted to Asia, and so these economies need to look at other opportunities, and they're more high knowledge I guess, industries, services industries, with that sort of thing, sciences, technology and innovation development. And like you said, things like, Boeing sharing information from Australia and the UK and the US and so forth. So that's what's going to drive these economies forward, is this innovation and development, and things like gigafactories and battery technologies and green energy and high tech developments like 5G networks and the innovations that come from that, and the progress now from 5G over the next 9 or 10 years to 6G, and all of those sorts of developments, all positive signs for all countries involved, and particularly I think the UK.
Yeah. Now, there is something I think we probably should discuss in today's market broadcast. We did mention it. We were discussing it a little before we came on air, which was this pretty wild event that has gone on in the Chinese-Indian border in the Himalayas. Now, of course, geopolitical risk is something that markets really haven't cared all that much about for a really very long time. It's pretty much with the collapse of the Soviet Union and the boom in globalization that came after. Geopolitical risk, when it was just sort of the US was the top dog and securing the world's oceans and trade routes and all of that. Geopolitical risk mattered much, much less than it did beforehand. Now, however, as we've got this Cold War II dynamic going on, it's like geopolitical risk is returning again. But because it's been gone for so many decades, I don't think people, it's only my perception, of course, but I don't think this is something that people are used to in any way. It's been absent for so long that investors don't think about it because they've almost been trained not to think about it, because we just buy the dip and markets then go up, and whatever dispute has been, whatever the dispute is, it will be resolved and then things will go back to normal, etc., etc. I find it's pretty wild what appears to have gone on. You've got 20 Indian troops reported dead, at least. And seemingly having died from these guys were beating each other with batons wrapped in barbed wire, getting chucked into deep ravines. The Chinese Communist Party has not revealed how many casualties it suffered, though of course the CCP is notorious for not reporting casualties in general. I read the other day that casualties that were suffered in the 1960s by the People's Liberation Army were only revealed in 1992, decades later. So it's quite unlikely that we're gonna know exactly how many PLA actually died in this incident. But the fact that they're killing each other now over this border dispute does seem to be quite a serious flashpoint. And I wonder what do you make of it all? Do you think geopolitical risk? Do you think geopolitical risk is being adequately priced by markets? Do you think that this won't really amount to much, or do you think that this is this is actually going to end up becoming maybe an instigation for a much larger sort of geopolitical event?
Well, at the moment, I mean, it sounds like it's the set of a Hollywood movie. It sounds like they've not been able to film anything in Western countries, and so they've just shifted operations to film some wild war movie over on the Indian-Chinese border. And I wouldn't be surprised if at some point on like Twitter a photo came up where it showed Jason Statham fly kicking some dude in the head. It's hand-to-hand combat is not the kind of phrase you expect to hear in a military conflict in the modern age. But it's a bit bonkers. It's a bit The Walking Dead, bats wrapped in barbed wire. It's bonkers. It's positively bonkers. And geopolitical risk is something that investors always really need to think about. But when it was a day or 2 days ago, whenever it kicked off, that World War III was trending on Twitter, the echo chamber that is Twitter, and that probably says a lot, because there's a number of Indian troops and Chinese troops have died in hand-to-hand combat with barbed wire bats, but I don't anticipate it's going to be the start of World War III. It's one of those situations where modern warfare it's not this idea of a world war, a global war. All countries are really in a good old-fashioned Mexican standoff here. China could nuke the US, who would nuke them back, who would nuke Russia, who would nuke China, who would nuke the EU, who would nuke them back, and the British would send some ships and nuke them as well. So, World War III is not about to kick off in any sense. But what we will see is we'll see these pockets of conflict, like the South China Sea, like the borders of India and China, or wherever they might be. And that's where conflict's going. It's going to be isolated. It's going to be contained. It might cause some ripples, but I don't anticipate it's going to cause great shock. The geopolitical issues that markets tend to worry about more are things around trade agreements, or tensions between countries over trade, like the Chinese and the US, that's just been going on now for far too long. But that's what's a greater political risk to investors that they need to consider. And a lot of those trade geopolitical risks are only heightened and tensioned around these sorts of pockets of conflict. So what the sort of flow-on effect is that you end up with tension between India and China. That flows into any sort of economic talks that they may be having, either with each other, with allies of each other, with enemies of each other, with funding of other states that may be supporting or not supporting. So, it's a stone in a pond, and the ripples come out of that. But the ripples get weaker as they sort of head closer to shore. So, I don't think it's anything to be greatly worried about. It's certainly not going to kick off World War III. It will increase tensions between certain trading partners, but I don't think this one's really going to send a giant shockwave through the market. The thing that the market really needs to worry about at the moment is how many unemployed people in America are going to stay unemployed for the next 6 to 18 months, and the flow-on effect that that's going to have for their economy, because that's going to hit them far harder than anything else that's happened in the last 12 months.
Yeah, it does seem like the market has kind of ignored a lot of that in terms of unemployment figures in the US, and this is something that many market commentators have pondered over, and it's such an extreme number that I don't think it had ever been recorded in the US. And the sheer monthly change in unemployment figures when it arrived in still the March kind of time was really just incredible. And it's not, and while it's been, there have been many positive developments, especially in the last couple of weeks, in terms of the amount of people in the States who had managed to get a job. I mean, the figure is still very high. Now, this is sort of a shift on the same theme. I actually noticed yesterday there was the announcement that the Boris Johnson administration in the UK are actually merging the Foreign Office with the Department for International Development. And the DFID has a much larger budget than the Foreign Office does. And of course, this was only separated in 1997 by Tony Blair. And now they're getting pushed back together again. It does seem to me that when we're talking about geopolitical risk, and we're talking about the sort of the changing international environment with what the UK government can do in that, it does feel like we're going into sort of an era where governments are going to be sort of a lot more mercantilist in their approach. Where in terms of increasing the amount of national wealth is something that is quite key, and we're only going to give you money in terms of aid if we're going to really benefit out of it, if it's going to meet our foreign policy objectives. Now, in terms of the announcement so far, it seems to be that the Foreign Office is quite reasonable in terms of what is being proposed here, i.e., international aid money is only going to be given and it's going to be restricted to it's only going to be extended, as it were, to parties who are not involved in things like money laundering, in terms of human trafficking, in terms of international crime. If there's a high risk of this aid being squandered, then the aid is not going to be extended, which seems fair enough. But it did feel to me like this we really are returning to a world where geopolitical actors and acting is much more overt.
Yeah, it's, just talking about that idea of foreign aid. So foreign aid's always been a reasonably hot topic, with government, with voters, and I think what we're going to see, and this is a bit of a small leap, sort of from where what we've been talking about, is that the way in which foreign aid is distributed to countries around the world gives credence to the requirement for countries to have programmatic money, to have a digital currency, because that effectively means they could pay out foreign aid in a UK backed digital currency. And if it subsequently is shown to be laundered or to not be going to the intended targets, that gets switched off, literally like a light switch. And I think that's that these sorts of I guess government organization, combinations and realignment, and how governments look to deal with other countries going forward from sort of what's happened in the last 6 months. I think that's going to give greater acceleration to other countries following in the steps of what China's been doing, and having state-backed digital currencies, because it gives them greater control over their domestic economy, and then how money flows out of that to allies, trading partners, foreign aid the recipients, and all those parts of the world in which countries all sort of reach out to. So in one sense, that also helps them protect the domestic economy better, because it gives the government and it gives the central bank far greater control over the ability to create, disseminate, and then claw back that money if there's an element of if there's a programmable nature to it. And so I think that the bigger story that comes out of this is that shift to the idea of central bank and state-backed digital currencies.
I mean, there's that sort of digital currency, as it's called, m-pesa. I'm sure you're very familiar with it, which has been incredibly successful in Kenya. And it does, it's managed to sort of increase the economic growth and development of the nation, simply because it allowed value to be exchanged much more efficiently. Right, it's allowing capital to flow much more fluidly throughout the economy. I do wonder, but are governments really advanced enough? Are they really sophisticated enough to realize that this is kind of an opportunity to use new mobile payment technology? I don't have the most faith that here in the UK that Boris Johnson's government is going to do something like that. I mean, what do you think?
Yeah, I don't necessarily have the faith that the government's going to be nimble enough and sophisticated enough to do it in a way that meets all the red tape and bureaucracy that they have to go through. But I think what you end up with is, with the idea of digital currencies or being able to flow through mobile networks to areas like these, and that they do create pockets of wealth creation where people quite quickly then have access to resources to, whether it be, foreign aid isn't always necessarily just going to, the absolute destitute poverty areas. While a lot of it does do that, a lot of it goes then as well into investment, into infrastructure to enable these areas to lift themselves out of poverty and stimulate economic growth in these regions. So, I think while a lot of people bemoan wireless technologies and talk about the risks and dangers of further advances in wireless technology and hyperconnectivity, their view on these things is highly and extremely narrow, because what it does is these wireless technologies provide access to opportunities for economic growth, for wealth creation to regions that previously just weren't able to be connected, that you could never get physical infrastructure out to some of these locations and into remote parts of the world. So, the benefits when you look at the bigger picture from digital currency, the ability to get digital currency from point A to B through new wireless technologies, through greater reach with these wireless technologies, whether it be 5G or whether it be satellite, internet, future sort of innovations and iterations of that towards quantum internet sort of connectivity as well. These are all steps forward for the world to progress and to again take another step forward in its ability to create wealth, to stimulate economic growth, to lift people out of poverty. The world's always going to have issues, and there's always going to be geopolitical tensions, and there's always going to be pockets of I wouldn't say war, but military activity, and there's going to be countries that fight with each other, and there's going to be plenty of opportunity with new technologies and these sorts of developments, like digital currencies, like new wireless technology, to create opportunity for parts of the world that probably never had it before either. So while people in Mullumbimby in the Byron Shire in northern New South Wales crack it because they think 5G towers are going to leave their kids in a goop of digital smog, there are parts of Africa and Asia that welcome this sort of technology with open arms because it gives them a chance to actually generate some wealth and lift their living standards. So it's a good thing if you open your eyes wide enough for it.
Very good, Sam. I think that's a good way to round off today's market broadcast. Thank you very much for joining me.
Thanks very much.
And that was today's market broadcast. We shall be back again on Friday. Interestingly, if you're actually interested in some of the topics we've been discussing with the likes of mobile communications and payments, interestingly, Charlie Morris actually over at the Fleet Street Letter Wealth Builder tipped a company just yesterday actually, which is all about exactly these themes. It really harnesses all of these together. If you are interested in pursuing any of that with your own investment capital, but as I say, that is all we have for today, and we shall see you back again on Friday.